Alright, good day, good day. My name is African Crypto Warlord. I usually do XRP streams, but considering that that's looking a bit trendy, we're going to be looking at some BTC today just to get our overall pitch of what our general crypto markets are going to be doing. Okay, so what I usually use for these analyses are volatility tools. If it's the first time that you're watching this, otherwise, I'm just going to plot out. So I have a PB2 cone, probability distribution cone, provided by Alpha Trading. So what we can see here is I've set it up on the 15 minute so that this is a Laplace distribution level, right? My cone is set up on Laplace distribution level, and this is where its source was. So its source is at $21,396, and that's called a mean reversion point within a distribution cone. So generally, what I'd be looking for is, considering we've been playing around with our 10th level on a distribution cone, which tells us that we're probably ready to start mean reverting, okay, to the upside, which is 21,395. It's the same as the source. So this is how it looks a little bit zoomed out, because you always need to have but as they say, zoom out. But we're zooming out on the 15 minute, and we're still able to just keep on observing our trends. So you can see breakdowns happening, you can see it pushing through, and all this other data. So what I'm currently looking at in the market, okay, is we can see this structure forming. All right, so I have return oscillator here. I can see this structure forming, which does look kind of bullish. Our super scalpers just hit it, so we can look for some continuation to the upside. This is just on our 15 minute. Our Shannon Entropy is expanding. So at the same time, what I do go look for is what's going to deny this mean reversion, and if it's denied, what is the level that can save it. So if this mean reversion point is currently denied, then you can save it somewhere here on this line, on this level, okay? And what else is at this level? Because we want to look for confluence and data, because confluence and data could add up to magnets, okay? So what we can see here is that this yellow line, so if you see a yellow line, yellow lines are daily mean reversion points. These dots are weekly mean reversion points. And then we have monthly targets, which are up here. So a monthly target is pretty much just say 2226, $22,226, you could say, is the upside target just within this new month that's going to be printing. Or we see where the new month prints, not tomorrow, but the next day. And then that will be your new upside target. Or if it prints below, that will be a new downside target. Just to bounce off to see where the trend is going on higher term time frames, for example. So remember, we're still on the 15 minute here. Okay. So what I'd be expecting is, if we fail this region, this is previous historical data that's in the book here that we can see carving out some market structure. If we fail this move, let's put up our reverse wave trend. It looks like it will be here. So if we fail this move, I'll expect us to come visit our weekly mean, which is just coincidentally, if you trade TA, look at that. It's the top of market structure, okay? So that's where this current market structure can be saved. And as you can see, if we get here, we can set in a bullish dip. And pretty much at the time, 30th of August, in an hour and 45 minutes, timing says that this is a good place to be. So currently we are breaking, we've hit our higher term reverse wave trend, and now we're breaking down. So I use reverse wave trend when I need to figure out what's going on in between the cones, when it gets choppy. All right, so now we're going to start closing candles below this reverse wave trend. So this is the high term time frame, this is the low term time frame one, these two orange ones. So as you can see, it's struggling to break through. So my general observation is, look, we have a mean reversion point of our return of our reverse wave trend coming in. So to come and meet this region sometime in the next, I said an hour and 40 minutes. So this is now sort of saying, yeah, that's the same time, 12:45. Okay, so that's Africa time. So from here, we're going to go look at different levels and see how our return oscillator is looking. So currently my data is telling me my law of small numbers has flashed, my law of large numbers is flashed, which means volatility is at 0, and I'm weighted to the right hand side, I'm weighted to the left hand side on my bell curve, right? So because this one's flashed, which says that the fat tail side of a bell curve, that downward part of the distribution cone, is non-existent. So currently it's on one side that's been drawn. Okay, so let's go look at a return oscillator, see what's happening here. So our return oscillator says that we are looking to at least attempt a push through here. These are random. There's expansion. This is at a random price action point. It's not so random when we can see our reverse wave trend here, for example. So we're going to go scalp up. We're going to go look at our 30-minute, and then we're going to just go looking for confluence on time frames. So we have a 30-minute that's looking to cross here. Contraction in volatility was negatively correlated. There seems to be a little bit of a trend trying to come off of here. Okay, there's still some more target to the downside if this does fail, but you'll see a bullish div form, a hidden bull div form, something like that. Okay, we bounced off the top of our reverse wave trend on our doubled up time frame from the 15-minute. Okay, so what's currently holding us up? We have our 45-minute that's mean reverting to the downside and volatility is expanding. Our general trend is also starting to decay to the downside. So what you could say is outlier points. Generally, if it wants to rush, this will be fighting for the super scalper at this outlier point. In my return oscillators, returns are obviously up to the first move. Oh, let me just control Z that. There we go. The 90-minute. So we're going to see what our 90-minute is. I reckon it'll be pitching down. There you go. So there's a bad drive. There's a bad div happening. So they're going to try drive that through. What's going to prevent this bear div on the 90-minute, we may ask? For example, something that I put a lot of weighting on, right? So I know that this bear div is going to be stretched out until my volatility indicators tell me, okay, it's time for this bear div to play out. So how am I reading this? I can see that there's contraction in volatility, right? So volatility is decreasing, which would technically mean the candles aren't going to be as big or wide as the previous data set. And volatility is contracting whilst negatively correlated. So that tells me that there's something called positive drift. And positive drift, for example, is going to lift this market up. So yes, the returns are starting to decay to the downside, but the bots and algos are telling me that they're willing to take the risk on here because it's naturally wanting to float back up. Okay, so that's just the 90-minute observation. We're going to take a little bit of our time here getting through this. Okay, so we can see a little bit of bear div also playing out here, wanting to form contraction negatively correlated. That's currently cancelling out any bear div plays until stated otherwise. We have hit outliers on our general trend, but once we've hit those outliers, I want to wait for, I don't know if you guys will see it, you can see it here. There's little red flashes, I want it to stop, and then that's when I want to enter in the trade. So currently we're looking at the lower term time frame, so we're going to wait for a flash to end here on the lower term time frames to see if that is a viable opportunity to scalp, which would follow through with a whole bunch of other stuff. But our Shannon Entropy is telling us, wait, be patient, this is maybe not the right time, given we have had a lot of downside. So these negative returns have played out. But what we can see here, so BTC is a little bit not a bit confused. It's just going to take a lot of signal processing to get this right. So general returns are going to start decaying from here. But same thing. This is very interesting. 4 or 5 time frames in a row, we have contraction and it's negating this move. Okay, so there's at least a whole other print on a 6-hour that can still drag this out. So there's something forming here. Let's maybe go look. How long are we away? We're an hour and 15 minutes, an hour and 2 hours and 15 minutes away from a 12-hour print. So there's your next 12-hour print. So that's generally what's keeping our returns up here from what I can see and say. Oh, those were old notes sent to a crew. Anyway, they sort of do make sense here. Let me switch them off. Okay, so what we can see here is that Shannon Entropy, not the line and the column aren't matching colors. So that's going to tell me that there's a little bit of confusion. My line is telling me, my yellow line is telling me that there's contraction here, but this one's telling me that the trend is increasing to the upside. So it negates itself. So I'd say this could look like a doji candle, given that we do have a weekly mean over here. But we've pulled in, we've done our downside, and this is our breakout from the doji candle. To see if we can get that red, we get that red, the next candle is more than likely going to want to push up into higher levels. Let's just demarcate our first reverse wave trend over here. My PB cone is still on, doesn't need to be, and that data would have been incorrect. Anything above or below the 15-minute off that distribution cone. So we can see returns are random, trend is random, whilst returns are expanding to the upside. So that does reflect in a lot of our other lower term timeframes that we saw where Shannon Entropy was actually negating the bearish dip. So that explains that option. Then we're going to go look at our 2-day, for example. We'll throw our 2-day up. So what we can currently see is our 2-day has started its break to the upside. It left and crossed through its mean and got chowed. And this is a very tight one to play on the 2-day. But if you got it, it's going to be a hard fight because we need to flip this one red. And then you'll get your trend through here. So we need to wait for the ebb and flow and volatility here. This is obviously one very big candle. Any one of these lines, it can close that. Given that the 2-day data is closing this evening, maybe your daily mean could be a wick for an open. I'm not too sure yet. Let's go see what our higher time frames have to say, if there's enough positive drift. Okay, contraction. This one's a bit confused. So 3 days wanting to rectify itself and look for a trend. We've had our blue flashes off. So this is the opposite one of our 12-hour where we were waiting for the red flashes to happen. Blue flashes off. So blue flashes, when they turn off, that tells me it's a buy signal through. And as you can see, that's a pretty strong buy signal. So we're going to throw it up on the 5-day. We saw that return oscillator is leaving its outlier, which will match up with our 5-day. Alright, so our 5-day ends in 3 days and 15 hours. This has started to really mess up with its decay. So the next best alternative, I'd say, for the next 5-day print is this one contracts, which goes green. Whilst negatively correlated, adds float up. And where's your monthly mean? As we demarcated earlier in the stream, 222.32. Alright, we do have the opportunity to stick in this trend to the downside here. Our general trend is telling us this. This is our first pop and first attempt up out of this whole noisy region here, coming with some clean signals. As you can see, this mean reversion point matches up with pretty much our last spike down in the market in July. Okay, so 7-day. Boop. 7-day looking to turn around here is also a bit confused. Our flashes off, returns to the upside. We are still pretty much in the downward trend on the 7-day, but the next print could print it out of our trend of returns and lift it up. As you can see, this can form as a doji, which would demarcate like our, I think it was our 3-day or 2-day, matching up as a doji. Also demarcate that down to the downside here. So there's a lot of work for BTC to be done, but I wouldn't necessarily be panicking because this is one of my favorite indicators here. I'll put the UMP on. So XRP has done the same thing where the 21-day is, if it closes a candle above 21.38, this is a moving target. So as this candle moves, this moving target. So these are very live indicators. Okay, so as BTC comes down, this line is going to drop a bit more, and then it's going to flash red. If it closes below that red line, which I'm going to just say is maybe like $20,053, and it goes red, and you have a candle close below that on the 21-day, you're going to start looking for continuation to the downside. Okay, XRP, this was the buying opportunity that I demarcated like 2 weeks ago. Is this 21-day, wait 2 days, there's going to be a pullback. So I'm expecting BTC to be in the similar range, given that we are mean reverting to the upside. We've hit our outlier returns. They're still in the trend to the downside. We haven't had our blue flash off yet, and this is a new 21-day print. So this market structure here, yes, can be a bit confusing. That's why we can zoom in and use tools like our PB cone to demarcate areas of interest on these lower term time frames. So as far away as the 21-day time frames look, these levels, obviously this is in a whole day's price action, so these levels are still highly attainable. So if BTC fails from here, we'll just say from this JMA, because we want to touch, you have 0.47 to the downside for your weekly touch. You want to obviously try push itself back up. Then you'll have your daily mean, which is going to want to target someday, somehow, obviously if it doesn't break through the weekly mean, then it's not going to target the daily mean. The next daily mean is going to print a little bit higher. It's going to target that daily mean, and then from there you'll get a little bit more continuation signal. So yeah, I hope this is a helpful analysis. I'm going to turn these VRE levels off so that I can leave you guys off with some good observations. So these are like UMPs. A lot of technical analysis traders, they're trading SMAs and EMAs. This is different math. It's like logarithmic, a whole bunch of transformations that you can do on these lines. And as you can see, they change color. You know, nice like neon lights underneath your car, but these ones actually make the performance better. Anyway, so here's your first touch on market structure, 2353. Failure from this region. When we touch here, I'll be looking for the next drive to try drive us up into the cones here, $20,000 and $20,000, $460. Okay, yo, I say the big numbers like Zuma. Anyway, so helpful analysis. As you can see, in due time we can have this ultimate power mean print down here, and that's timing of the market. So expect a pullback maybe to this region if we lose here. But this is our daily range, you could say. Alright, we break through here, we're changing trends on our 6 hour, for example. So I hope this analysis is helpful. These tools do work. There's your trend change on your 6 hour, and yeah, the candles are going to get smaller to the upside, your UMP 20,807. So that's your general trend change out of here. That's your first cap if you can break out of the 15-minute cones. Alright, I hope this is a helpful analysis. Have a good day further, and we'll do maybe a BTC analysis once a week so that we can see how it plays through these cones. I hope you have a good day further. I've said that a million times. Ciao, bella.